So what if this huge concentration of wealth we always talk about,
Hmm.
what if it wasn't, set in stone?
Mm-hmm.
Imagine a future where owning bits of big, valuable stuff becomes way more common, not by taking from Peter to pay Paul, but by changing how assets are even held and traded.
Sounds pretty radical.
It does, right? But could this idea of the greatest distribution of wealth ever actually be possible? Maybe driven by this thing called tokenization.
That's exactly the fascinating possibility we're digging into today. We're looking at a document that explores just that.
Right.
It tries to connect the dots, between crypto, what big players like BlackRock are doing, and how this might open up investing for, well, for everyone.
Okay, let's dive right in then. The goal here for this deep dive is to really get a handle on tokenization. Why is it suddenly on the radar for giants like BlackRock?
Right?
What are governments hinting at? And I guess most importantly, what could it actually mean for you listening? We'll even touch on this other idea mentioned, consumer-earned tokenized equities, sets.
Yeah, sets. It's all moving so fast, and understanding the forces behind it is pretty key. Let's start with BlackRock. That's a name everyone knows in finance.
Absolutely. And their story here is almost a complete U-turn, isn't it? I mean, between, 2017 and 2020, the CEO, Larry Fink, he was pretty down on Bitcoin.
Use, yeah, very skeptical.
Called it an index of money laundering. I mean, those are strong words.
Very strong, especially from him. That public skepticism was definitely there. But then around early 2023, something clearly shifted.
Right, a big shift.
A really significant change in his tune, yeah.
So what happened? Why the change of heart? From crypto skeptic to someone seemingly jumping in.
Well, the document suggests two main things were going on. First, institutions were getting really interested. There was real growing demand for digital assets from them.
Okay, institutional demand. Makes sense.
And second, the view of Bitcoin itself started changing. It wasn't just seen as, speculative anymore. People started talking about it as a potential flight to quality asset.
Like somewhere to go when things get uncertain.
Exactly. That, and also seeing it as a real store of value, maybe a hedge against inflation eroding your money.
And it wasn't just talk, was it? They actually did something.
Precisely. Actions followed the words. They launched their spot Bitcoin ETF, that's IBT, in January 2024.
After the SEC gave the green light.
Right. That's a very concrete move. It's one thing to say you see potential. It's another to launch a product, making it easier for regular investors to get involved.
Yeah, it really makes you wonder what their internal numbers were showing. For BlackRock to make that kind of move, the data must have been persuasive.
The document gives some pretty interesting context on that. It compares how long it took crypto to hit a $1.8 trillion market cap,
Okay.
which was just 13 years, 2009 to 2022, and the growth rate.
Yeah.
An absolutely massive 358.7% compound annual growth rate, CAGR.
Wow, 358%.
Yeah. Now compare that to the NASDAQ and NYSE combined to reach that same $1.8 trillion mark.
How long did that take?
27 years, from 1971 to 1998. And the CAGR was just 16.2%.
Okay, hold on. 13 years versus 27 years, and 358% growth versus 16%.
Roughly 22 times faster growth for crypto to reach that milestone.
It's not surprising BlackRock took notice then, is it?
Mm.
That kind of speed signals something potentially, huge.
It certainly does. And that leads us straight into the main topic, tokenization. We've mentioned crypto, which you can think of as the underlying tech, the rails.
The infrastructure.
Right. Tokenization is a specific way of using that infrastructure, and potentially a game-changing one.
Okay, so let's pin it down. What is tokenization, simply put?
Okay, simplest terms. It's using blockchain, that crypto tech, to create digital tokens that represent real-world assets.
Like a digital claim check?
Kind of, yeah. Think of it like a digital key or digital certificate of ownership for something physical or financial.
So if crypto is the highway,
Mm-hmm.
tokenization is like a specific kind of truck or train running on it, carrying value tied to real stuff.
That's a pretty good analogy, yeah. The blockchain provides the secure, transparent way to create and trade these digital tokens. And it's not just financial giants noticing.
Right. The document mentioned President Trump.
Yeah, an executive order setting up a crypto working group.
To look into regulations, and even maybe the U.S. holding some crypto itself.
Exactly. So you see interest bubbling up at the government level too, recognizing this isn't just a niche thing anymore.
Okay, so how does this connect back to that huge idea, the greatest distribution of wealth ever? Where's the link?
The key link is this concept called fractionalization.
Fractionalization. Okay, break that down.
Right. Imagine something really valuable, say $1 million office building. Normally owning a slice of that is, well, out of reach for most people, right?
Sure. You have deep pockets.
But with tokenization, you could potentially divide that $1 million building into, let's say, 1,000 digital tokens.
Okay.
Each token represents a tiny fraction of ownership, and maybe each one costs $1,000.
Ah, I see. So instead of needing $1 million, I could buy in with just 1,000.
Exactly. You could own a fraction, maybe get a proportional share of the rent income. It suddenly makes investing in big, previously inaccessible assets possible for, well, a lot more people.
Things like commercial real estate, maybe art, other things.
Potentially, yes. It breaks down these high-value assets into affordable chunks. That's the democratizing potential people talk about.
The document uses this striking image, the sliver pie. Can you paint that picture?
Yeah, it's quite powerful. Imagine all the wealth in, I think it was 2022, represented as a pie chart.
Okay.
According to the data they cited, the top 1% of people held, wait for it, 90.8% of that pie.
90%, just for the top 1%.
90.8. Then the next 9% held 8.7%.
Okay, so the top 10% have almost everything.
Pretty much. And the bottom 90% of the population, they were left sharing just 0.5% of the total wealth.
0.5% for 90% of people.
That's the sliver. It's a really stark visual of inequality, and it kind of underlines why people are looking for alternatives, like maybe what tokenization could offer.
It's incredibly stark. A sliver is right. And the worry, I guess, is that without some kind of change, it just gets worse.
That's the concern highlighted, yeah. That the sliver could get even thinner, limiting opportunities for almost everyone else. Now let's look at some wider economic figures and forecasts.
Okay, what are the projections saying about how big this tokenization thing could get?
Well, the document mentions a total addressable market snapshot. It projects a huge shift towards tokenizing real-world assets, or RWAs. Their number is $350 trillion by 2039.
350 trillion. That's almost hard to even imagine.
It's a massive number. Now, following that, there's this interesting chat mentioned between someone called Max and an AI, Claude, talking about market growth rates. They look at the CAGR, the compound annual growth rate for the U.S. and global markets, but more recently, like 2014 to 2024.
And what did they find? Was growth still as high as those earlier figures we discussed?
Not quite, no. The U.S. CAGR for that decade came out at 7.8%. The global one was 4.7%.
Okay, so quite a bit lower than that 16% from the earlier period.
Definitely lower. And that earlier higher rate had been used for some pretty optimistic future market size prediction.
So using these newer, lower growth rates changes the picture for the future.
It does. If you project forward using these more recent CAGRs, the total global market cap might be closer to, say, $158 trillion by 2034.
Okay, $158 trillion.
Which is a lot lower than some other forecasts that were based on the older growth rate, some going up towards $422 trillion.
Right, but wait. This brings up something interesting. Didn't the document also mention a figure like $200 trillion in tokenized assets by 2034?
It did, yeah.
But if the whole global market is projected at maybe $158 trillion, how can you have $200 trillion within that market tokenized? Seems contradictory.
That's a really sharp observation, and it's something Claude, the AI, apparently addressed. There are a few ways to think about reconciling those numbers.
Okay.
First, a really big chunk of the existing market cap, the $158 trillion or whatever it ends up being, would need to actually get tokenized.
So converting existing assets into token form.
Right. Second, tokenization could go way beyond just stocks and bonds. Think real estate, art, commodities, collectibles, things that aren't always neatly captured in standard market cap figures.
Ah, so it's pulling in value from outside the traditional stock market definition.
Exactly. It's about representing existing wealth in a new tokenized way, not necessarily creating $200 trillion in brand new value out of thin air.
That makes more sense.
Plus, you could see parallel markets develop, like an asset might exist in its traditional form and as a token.
Okay.
And finally, there's the whole world of private markets, assets in private companies, private equity, that sort of thing. Tokenizing those could add a huge amount that isn't in public market cap numbers.
So it paints a picture of a really different kind of financial plumbing being built. And the big institutions, they see this coming.
Oh, absolutely. The document strongly suggests leaders like Larry Fink see tokenization as a fundamental shift, something bigger than just tinkering with current exchanges.
They're positioning themselves.
Totally. Moving into crypto ETFs, building digital asset infrastructure, They likely see new ways to make money, sure, but also a changing market structure, growing demand for these fractional assets. They want to be ahead of the curve.
It makes sense. If the potential is that huge, you'd want to be involved.
Which brings us to that other concept mentioned, the people's autonomous economy, or PAE.
Right. PAE, what's the idea there? How does it fit in?
Well, the PAE, as described, seems to focus on automating tokenization. It talks about using random digital assets as the basis for these sets, the consumer-earned tokenized equities.
Random digital assets, what does that mean?
It sounds like maybe a diverse basket of digital representations of value, perhaps designed to be more stable, less volatile than betting on one single crypto. The goal seems to be inclusion without mass speculation being the main driver.
And these sets, consumer-earned tokenized equities, how would those work?
The idea seems to be linking them to maybe consumer activity or participation in certain networks or ecosystems. So individuals gain ownership represented by these tokens based on their contribution or engagement.
So less about just buying tokens and more about earning a stake through participation. A different model.
Exactly. It seems aimed at facilitating real economic participation based on creating value, not just trading. The hope expressed is that this could be a way to tackle that wealth inequality problem more directly.
There's that Henry Ford analogy the document uses too.
Ah, yes, the Henry Ford insight. It's a classic.
Can you quickly recap that?
Sure. Ford famously realized he needed to pay his workers enough so they could actually afford to buy the cars they were making.
It wasn't just good PR, it was good business.
Exactly. It was smart economics. Create a customer base. It shows that extreme inequality isn't just a social issue, it's a potential business problem. If too few people have money to spend, who buys the products? It can stifle the whole economy.
Right. Which ties back to the overall message, doesn't it? That
Yeah.
maybe we, the people, consumers, have a chance here with these new technologies.
To push for a fair share, using measurable tech based on a desire for, a better economic future.
And the point is made that it's not about asking for handouts or gambling.
No, it's about recognizing the actual value consumers contribute to the whole system, to the investor economy.
And the document wraps up saying this PAE concept is designed specifically to empower communities, boost growth, and improve inclusion.
So you kind of have two angles emerging. BlackRock bringing traditional finance assets onto the blockchain, and the PAE exploring this more grassroots participation-linked tokenization.
Okay, so let's try and pull this all together. We're definitely seeing a big move towards digital assets
Yeah.
with huge players like BlackRock getting seriously involved.
No question. That shift is clear.
And the core engine here seems to be tokenization, this ability to break down ownership of almost anything into smaller pieces.
That fractionalization piece is key, yeah. It potentially opens doors for so many more people to invest in things they couldn't before.
Which connects to this idea, maybe ambitious, of the greatest distribution of wealth ever. Not guaranteed, but a potential outcome of this tech.
It's a potential paradigm shift,
Yeah.
moving beyond just trading stocks to owning fractions of a much wider range of assets,
Yeah.
lowering those barriers to entry.
We've definitely seen how stark the current wealth picture is, that sliver pie. Tokenization presents at least a possible way towards something more inclusive.
It does. It offers a different mechanism, potentially, than we've had before for broadening asset ownership.
So maybe a final thought to leave everyone with. What happens if most people don't pay attention to this? If tokenization just happens, led by the big players, without broader understanding or participation, what does that sliver pie look like then, down the road, if the average person isn't engaged with how these new financial tools are developing?
That's a really important question to ponder, isn't it? As this technology keeps evolving so quickly. Something
Right.
definitely worth thinking about.